Aladna, I'm so excited to talk to you as a CPA that's working with cryptocurrency because 4 out of 5 young people I meet today are already involved in it. And when they go to their experts and CPAs and financial and they go, oh, it's terrible, run from it, what they're going to do is just write them off and do it on their own. So the fact you're offering this is so excited. These are questions that are matched what I've heard from people already. And that's why I want to just go through them one at a time.
Absolutely. Happy to be here. Thank you, Martin. Thank you for having me.
What got you as a CPA to even get into this? Because this to me is so forward thinking. And many, it's either not on the radar or they don't realize how many different cultures of people are already involved.
So because I do international taxes, Martin, so this is something that comes to me so very often. So I have many clients in the past few years who have been dealing in cryptocurrency, and they were totally lost when it came to taxes because some of the platforms, they would not even send them 1099B, and they did not know how to compute the basis. They did not know how to, if the transaction is taxable or not. So because I got so many clients who dealt with cryptocurrency, that led me to get into it to see what it involves and how I can help my clients and people to figure things out, because this is a very fascinating subject and how it is becoming so dominating in the industry and how it is actually threatening the regular platforms and regular intermediaries like banks and all that. So this is an ever evolving subject. I was very fascinated about it, and when I got so many clients, so that was the point where I'm like, I have to get a niche in there.
Way to go, because I found you just on a search. I was giving a talk on the topic and I said, somebody's got to be out here. Some version of this is our future. It's now going away. The cat's out of the bag. The fact that humans can have freedom from one point authority control over their own finance, just in the, what, about 2 billion people that are unbanked in the world, that don't have as many opportunities, even that alone is worthwhile. So there's so many side cuts on it. My first question is, from your perspective, is crypto treated as currency or property?
So it is treated as a property. So like any other property, whenever you have a transaction, whether you sell it, so you have to report it to IRS. So it is not treated as a currency. It is treated as a property, Martin.
And that's so important because I know a lot of people think, oh, it's something different, I'm not going to have to do it. And we don't want to see anyone get caught off guard and then owe a lot of money they didn't expect one day, right?
Exactly. And that's the whole reason, because people don't realize it. Sometimes they think it's a currency because it's called cryptocurrency, and they just don't feel that anytime they are exchanging it, they are buying from the cryptocurrency, they're selling it. They never thought that, that it triggers a taxable event. So yeah, definitely it's very important to know that even though it's called cryptocurrency, it's a digital currency, but it is treated as a property for IRS purposes.
Yeah, let's say someone in Japan pays me $2,000 for services in Bitcoin.
This is going to be taxable. So because you provided the services, right? And somebody, instead of paying you in US dollars or in any other currency, they just paid you via the digital currency, right? So this is going to be a taxable event, and it will depend on the market value of those services. So if you provided the services for $2,000 and somebody paid you into cryptocurrency, so this is going to be taxable. And it depending on what those services are, if they are supposed to be to be reported as a 1099 or as a business income on Schedule C, so you will report it there. So definitely, anytime you get paid by cryptocurrency, you will have to report it. This is a taxable event, Martin.
So if I paid $2,000 and then in 6 months it becomes $50,000, because we know it fluctuates, first I'm going to have to treat the money as income for the $2,000. And then I'm sure if I take that $50,000 and move it out, that's another transaction. into fiat money, which is, of course, dollars.
Yes, yeah. So just because the currency, the value of the currency increased does not make it taxable. So if let's say, you got the 2000, where the cryptocurrency worth $2,000, and over the period it increased to $50,000, just because it increased, you're not going to pay the taxes. But yes, when you take it out or when you use it for something else or when you transfer it to the fiat currency, yes, that's when it's going to be taxable. No, and then you would have to calculate the basis for that. Whenever you sell that, you will have to calculate the basis so that you can come up with the taxable gain.
That's such a clear explanation. I received it. If it goes up, I'm basically paying on the 2,000 at tax time. But then if I pull it out, that's another gain I'm getting.
Absolutely. Yeah. It's like any other properties.
The next question I have is, how do I determine if my gain is short-term or long-term?
So Martin, let's say if you held the virtual currency for 1 year or less before selling or exchanging it, then you will have a short-term capital gain. Or if you held the virtual currency for more than 1 year before selling or exchanging it, then you will have the long-term capital gain or loss. So it depends on the time of holding that currency before you sell or exchange it. So the differentiating factor is 1 year or less, or more than 1 year. So if it's 1 year or less, it's short-term. If it's more than 1 year, then it's long-term.
That's excellent. Another one I've heard is, how do I determine the basis in virtual currency if I bought it for real currency?
So the basis really depends on what you want to use as a basis. So there are different, and that's where people need the professional help because they don't know. So there are, sometimes people think that they have to have the actual cost basis for each transaction, which is not correct, because they can use the first in, first out method. They can use the last in, first out method. They can use the highest in, first out method. They can use the actual cost basis. And sometimes what people don't realize it, they think that when it comes to actual cost basis, it's only the amount that they paid. But no, they can add the value of the expense for acquiring that currency. So they can, there are additional costs that can be added to the actual cost basis to come up with the adjusted cost basis. So there are multiple ways that people can come up with that adjusted cost basis. And that's important to know, because that would determine how much the taxable capital gain or loss is going to be. So there are many different ways to calculate the cost basis, Martin.
One thing that's nice about cryptocurrency is if you're using a wallet, there's a pretty good accurate of how it came in, when it came in, and things like that for making it available to you as well.
Yeah, absolutely. Yeah. So there's a history of all the transactions. It's just a matter of pulling it together and then working on those numbers. Yes.
How do I calculate my income from cryptocurrency I received following a hard fork? Now, we have to give a quick definition of hard fork on that is. So it's going to be, if Bitcoin splits, people need to understand that splits to Bitcoin friendly, and we have Bitcoin. It's not a split like stock, of course. It is at two different tracks. And this is such an important question.
Oh, absolutely, Martin. And actually, like you summarized it so well, that it's a split, but it's not like a stock split, right? And there are two different ways or two different directions. Basically, a hard fork occurs when a cryptocurrency undergoes a protocol change, and that protocol change can be triggered because people are not satisfied by the way. Sometimes there may be security threat, but it actually results in a permanent diversion from the legacy distributed ledger. And it may result in the creation of a new cryptocurrency. And that's whenever that happens, if the hard fork is followed by an airdrop or you receive a new cryptocurrency as a result of that, then you will have taxable event in the taxable year. When you receive that cryptocurrency. So just because the hard fork took place, that doesn't make it a taxable event. It depends whether you receive the new cryptocurrency as a result of that hard fork. So the hard fork is as you explained, that it's like two different streets. Okay, this is one way, this is another way. But as a result of that, if are we receiving the new cryptocurrency, and that's what the Bible point is. And if we do receive that new cryptocurrency, then it is going to be taxable income in the year when we receive it.
That's so useful, because I do want to just say, hard forks, you really want to be careful, because it's also a doorway for a lot of scams, claim when something occurred when it's not valid and so forth. So I do want to tell people, move cautiously on it. But if a hard fork occurs and I had 75 Bitcoins and then I'd have 75 of the new number of coins. It doesn't mean a dollar amount. And from what you're saying is, if I choose to not accept it, then I wouldn't have a taxable situation. But if I choose to accept it, now it's money coming to me, or currency of some sort, that I would need to make sure that's tracked properly.
Yes, absolutely. Yes. If you choose to accept the new way and you accept the new cryptocurrency, then yes, you would have to report it as a taxable event.
Now I want you to describe airdrops, because one thing in this field is it's almost like learning Klingon. There's an entire new language of all of this that clearly takes a little while to learn. And
so an airdrop is a distribution of a cryptocurrency token. Usually it's for free to numerous wallet addresses. So actually it takes place, a lot of, it's kind of like a bulk transaction, and a lot of people will get the coins added to their wallets, and they are generally taxable, and they will usually have a zero basis because they are not purchased or exchanged. And usually there are no costs to them. So they are usually triggered by an event, and the cost is usually in those cases are zero.
This is another great concept people need to understand. Do I have income when a soft fork in cryptocurrency I own occurs? And I've got to let you handle that, because people need to really know that difference between hard fork and soft fork.
So usually with the soft fork, Martin, only one blockchain will remain valid, and that doesn't really trigger any taxable event. So with hard fork, it creates two blockchains, and with the soft fork, it's the same path. It's just that the users, they adopt the changes. So soft fork, usually it doesn't result in any taxes, because there is no new coin that is being added to the wallet. It's just more like a different or a new way of recording that transaction. So soft fork, usually there is no taxable event or taxable income when a soft fork occurs. Yes.
Yeah, to me, a way to describe it is a soft fork is like a software upgrade to your operating system. They could occur and you don't even know it. There'll be an update to the software for the way it might show up is, if you have a hardware wallet for cryptocurrency, you'll say, oh, we have an update. And that would be for those individual coins. And it's like a software upgrade. So those would make sense. Of course, there wouldn't be taxable on it, but it's important that people know there is a significant difference between the two.
Absolutely. You explained it so well. Yes, exactly. So it's more like a software update, and it's done very subtly. So people don't even realize that it happened, and it really doesn't it doesn't change anything in terms of the coins or their value or anything. It's more like the system updates kind of things. Yes.
How do I determine the basis in virtual currency that I've received as a bona fide gift? So if someone gives you a wedding gift of $20,000 in Bitcoin, how do you address that and handle it?
So if you receive virtual currency as a bona fide gift, you will not recognize income until you sell or exchange it. And your basis in that virtual currency is going to be actually the basis for whoever gifted it to you. And the holding period would also go back to the person who gifted it to you. So the holding period would include the holding period that the donor held it for, plus the holding period that you have, you are holding it after the currency was gifted to you. And the cost basis would go back to the donor, and whatever the cost basis to the donor was, and whatever gift taxes the donor paid, they would be included and they would be added to the cost basis. So for the purpose of determining whether you have a loss or whether you have a capital gain, actually your basis is going to be equal to the lesser of the donor's basis or the fair market value of the virtual currency at the time you receive the gift. And this is for calculating the losses. For the purpose of determining whether you have a gain, your basis is going to be equal to the donor's basis plus any gift tax that the donor paid on the gift. So there are two different ways of determining the basis when you receive it as a bona fide gift. So if there is a capital gain, then there is a different way of calculating the basis. If there is a capital loss, then there is a different way of calculating the basis.
That's excellent. One of the things I have realized studying all this and getting into it is just it creates a whole nother level of complexity that we really have to accept and keep track of your records. No one gets out of two things, death and taxes. Don't think this is an exception. I did not receive a 1099 for the virtual currency transaction. How do I report my gains or losses to the IRS? And this would be for a service or product, right? Or service probably.
Yeah, so it really doesn't matter, Martin, because right now, the whole this cryptocurrency is not 100% regulated. So if the crypto exchanges, they are not US compliant, they don't have any obligations to issue those 1099Bs. But just because those 1099Bs were not issued, that doesn't take away the responsibility of the taxpayer. And then, and just because they didn't receive the 1099B, they can't think, oh, I don't have to report it. They still have to report it. They still have to account all the taxable capital gains and losses. And how they do it, I mean, it becomes very complicated when they have many, many transactions. And there are actually the services and portals out there where they can upload those transactions. And they can do it. We do it so what happens sometimes we see 1099B from the exchange crypto exchanges, but there are a lot of crypto exchanges that are not using 1099B to report these transactions. So the client, they would give us just maybe the Excel summary or some reports from the portal, and then we would have to calculate it to see what their cost bases are and what their sales value is. So it does get complicated, and that's why we always recommend that the taxpayers, unless they really know the ins and out of this, they should always hire a professional, because they might show more taxable gain, they might show less cost basis just because they don't know how to calculate those.
Yeah, and that's excellent. I just want to tell people we will have the links below of how to reach you, of course, in the text to find out, because you clearly are quite an expert on it. And here is, what is the 6173 letter? That's something I've heard of.
Yeah, so that letter is so what's happening, Martin, that IRS is kind of getting into more and more, because now IRS knows that a lot of people are trading in cryptocurrency and they are not reporting it. So now they have started issuing this 6173 letter, and which basically says, hey, we know that you had cryptocurrency and you didn't report it and you're not compliant. So you better go, either you amend the return, you report it, and you take action on it. So basically 6173 is IRS is saying, hey, we are watching you. We know that you didn't report your cryptocurrency, you didn't report your crypto transactions, and you better do it now. So that is what that 6173 letter is. So whenever you receive that 6173 letter, don't ignore it, because IRS wants you to take action on it. There is a similar letter, 6174, and that basically is kind of very similar letter, but it doesn't say that you are non-compliant. It says, hey, we know that you have cryptocurrency, but then it leaves out that part where it says, oh, you're non-compliant and you're supposed to do something. So when you get 6174, then you want to make sure that you are compliant, because if you are not, then you have to take some action. There is another similar letter, 6174A. And if when IRS issues that letter, so that basically says, hey, we know that you have the cryptocurrency and you are compliant, no action is needed. So when you receive 6174A, you are good, no action needed. When you receive 6173 letter, you have to take an action. When you receive 6174, you may or you may not have to take an action, but you have to really dig deeper into it to see why IRS issued that letter, if that makes sense.
Yeah, that's pretty important. That leads to the next one, is what is the Coinbase summons?
So the Coinbase summons, a few years back, Martin, the IRS actually sought to issue a summons against Coinbase, one of the biggest crypto exchanges.
Yeah.
And because not all the transactions were being reported to IRS, and Coinbase for the summons because they didn't want to report and provide the information on the account holders, but they lost it. And finally, they had to provide information for more than 13,000 account holders to the IRS. So like sometimes I hear people say, hey, no, this whole cryptocurrency business, how would IRS know? And so just never think about it. I mean, right now, there are going to be some portals where IRS would not have visibility at this point, but don't ever think that they would never have it, because IRS is kind of getting more and more into it. And they are even going after these crypto exchanges to make sure that they receive all the information from them. So that's what it was. And that's what it is called. And Coinbase had to report all those more than 13,000 accounts to IRS and showed all their virtual currency transactions. It was for 2013 to 2015, actually.
Fascinating. And yes, and that's why when people get involved with the places like Coinbase, they want to make sure they know who you are. I mean, many of these require a picture of your driver's license and others because they know they're being held accountable and they don't want to be the one caught money laundering or anything else. I mean, they want a sustainable business as well. So they are covering themselves by having clear documentation. You're real. This is real. And that's why they ask for this as well. Does crypto earned as income need to be reported on your tax returns? Now, this is similar to one we already got, but I've got several different versions to make sure we cover it.
Absolutely. No, this is a very good question, Martin. So people always think, oh, it's just, it's a property only or whatever they want to call it. And only when they sell it, that's when the taxable event happens. But no, that is not true. It's like, it's like your bank money, right? So if you lend it to bank or even someone else and let's say you get interest on that income, so that is taxable. Exactly the same concept. So if you make income on the crypto that you hold, you would have to report it. And depending on what kind of income that is, you will have to report it that way. So yes, to answer your question, any income earned on crypto will have to be reported as income. Yes.
So these people that are trading on one of the platforms, they've got an app and they're buying and selling and trading and everything else. I think it's pretty important they know this is not without tax impact, right?
Absolutely. Anytime. And even whenever they are using in exchange, because now there are so many big players in the market who are accepting these Bitcoins or cryptocurrency as a form of payment. So just because, people think that they can pay it and it's not going to trigger any taxable event is totally incorrect. So anytime you use that cryptocurrency to buy something or in the form of exchange, definitely it would create a taxable event, and you would be responsible for reporting it to IRS. So yeah, anytime they use it for exchange or for services to pay for the services, it has to be reported as
well. One of the things that I think is starting to occur is some of the people getting into it are almost doing it like they're playing options, where they're buying and selling quickly. They're staying in the crypto world, but I'm concerned they think, well, that's immune to taxes. And that's the specific question. Like, Voyager is an app that's very easy to buy and sell currency and never convert it to fiat money, which is dollar bills. And I think I'd like for you to very clearly repeat that of they need to not assume they're immune to taxes on that.
Absolutely, they're not, because anytime they do things like that, it may be a taxable event for them. So it's very, very important, because these are all new concept. Cryptocurrency, it started a while back, but like it took off in the last few years, and people, just because it looks so lucrative and how Bitcoin's the price just jumped, and people got into it without even knowing the ins and outs of it. So I do want to make sure, and as you said, I want to reemphasize that all the transactions that take place in crypto, the chances are that they are going to be taxable. So either the taxpayers, they need to know, or they need to understand how the cryptocurrency works, or if they don't, they definitely need the help of a professional to make sure that what they are doing is right and they are compliant. Because I heard so many people say, no, the government cannot even track who is holding those cryptocurrency, who is doing those transactions. And it's not true. Anything that happens in the US, anything that happens at the exchanges that are US compliant, definitely IRS can get any information out of that. So I do want to reemphasize that all those transactions, they are going to be traceable, and the taxpayer, they should know that they should report all the taxable income or all the taxable events on their income tax return.
Yeah, see, you can have a hardware wallet where you're holding your own private and public keys, but guess what? You bought it from an exchange. So there's a path over here, even though you have it secure on that wallet and you hold your keys and have your mnemonic phrase and everything else. You got it somewhere else. And that's, to me, an important to understand. That's where there is more of the history.
Exactly. And that's what it is. I mean, even though, it is your money, it's in your wallet, and there are all those security key and all that, but that doesn't mean that is not traceable. It is traceable, because that's the whole purpose, how the blockchain works, because there are so many computers that are working on it, creating that block. So there is going to be some traceability to it, how the transactions took place, where it's coming from. May not be to a common man, but yes, if the IRS would want to do it, they can absolutely do it.
It's even we now have the Bitcoin machines. Well, you actually gave over a good bit of information in that Bitcoin machine. So even though you might have put it on a paper wallet, you have in your safe where it's secure by that, or on a private key or something like that. Again, that machine has records of your data. So that's, I think, an important point to understand with this. Again, in life, we don't get out of paying taxes, and the thing is like my friend in business said, I want to have the problem of having lots of taxes to pay, because it means I'm making lots of money.
And that's a good problem to have. Exactly,
Yeah.
Martin. That's what I tell my clients, that you should not be looking into, how to save taxes. You should be looking into how to make more money, how to pay taxes, and how to be tax efficient. I mean, you
Right.
want to be compliant, but you want to be tax efficient.
Yeah.
So don't ever try to avoid taxes, pay
Right.
taxes, and be tax efficient.
Right. The last thing I want to just ask is, what is your advice to somebody for just starting out that knows it, and about, keeping some records, getting going? In my view, one of the safer things I found is if people are just buying and holding long term, it's a little simpler than if they're buying and trading all the time. But what is your view on that? And then the other one I want to ask is, just for a small business that wants to start accepting cryptocurrency, what is your advice for them?
So for the people who are kind of new to this, I would suggest that they definitely should kind of, read a lot of literature on it, because it's a very complex subject. So sometimes what happens, Martin, like, let's say some friends would say, hey, I traded in cryptocurrency and I had a lot of clients this year actually who made outrageous money in dealing in cryptocurrency. And when people hear that, everybody wants to get into it. But I would always recommend that they should know how the market works, how the cryptocurrency works, and what, like, when the cryptocurrency or Bitcoin, when the prices go up, what's the reason for that? When the prices go down, what's the reason for that? So really kind of, get the information on the cryptocurrency, how it works, what triggers those changes, what triggers those hikes, and how long they should hold it for. What are the tax consequences of that? So definitely, I mean, there is a lot that goes into it. So I would not recommend somebody just to hear it from somebody and then get into it, because it's a very, very complex subject. It might look easy to begin with, but when you really get into it, it becomes more and more complex. So I would definitely recommend that people need to have the appropriate amount of knowledge, education, and training on it before they actually get into it. For the small business owners, like, they accept it. I mean, this is a kind of growing concept these days. So right now, definitely some big players are already accepting it, Whole Foods, Starbucks, and all that. For small businesses, I mean, this is still kind of like, people trust it, and some people don't trust it. A lot of people don't even know about it, what cryptocurrency is. And when they have even heard about it, they don't know how exactly it works and how they can use it, how they can sell it. So I would say that they would have to have like the right kind of like customer base who can use it or who understand it. And of course, they would have to have all the systems in place to kind of, to process those transactions. So it's not as common at this point for the small businesses. Big businesses, definitely, of course, they can they can afford the cost of processing all these transactions. There are a lot of, even I know the small, they are not even the businesses. Like some people, they are providing the services in different countries, and then they will accept Bitcoins or other cryptocurrencies. So this is kind of is an evolving trend, I would say, and the future seems to be pretty promising. But so definitely, I would say more education, more resources would definitely help if small businesses, they start thinking into accepting these cryptocurrencies.
How can people reach you, and how can they learn more? And I'll put the links below, but I'd love for you to let them know. This was excellent in giving at least an introduction to what it is and learning a little bit more about it. But you're available both for individuals, businesses, and then other CPAs, you said, if they want help in understanding it themselves.
Absolutely, Martin. So I can be reached by phone, by email, and I have Facebook page. People can reach out to me on Facebook. They can direct message me there. And then I have a link. So if anybody wants to have a complimentary meeting, so the link is on my website. It's www.aradhnaagarwalcpa.com, and I would be happy to go over the basics of it. And and they can reach me on the phone on my business number, which is 919-670-5425. And my email is info@aradhnaagarwalcpa.com. So there are multiple platforms to reach out to me.
Well, this was wonderful, and you gave a lot of useful stuff for at least people to start realize there are variables here. The old story, don't get out of death and taxes. Don't get caught where something bad happens in the future because you haven't planned for it. And of course, I recommend they reach out and talk to you. You're available for it, or find a version of a professional that has been smart enough to start learning this and getting into it, because I think this is the future coming at us fast. And the old stick your head in the sand and just tell them it's scary and dangerous is not a good idea. It's like the parent that just says, all these things are bad, we won't talk about it. And that usually leads to the kid doing more of it.
Yeah, exactly.
So this was excellent. I really enjoyed it and appreciate your time. I'll put the links below, and I look forward to the future of us working together on other things.
Absolutely. Thank you, Martin. I totally enjoyed the conversation. And thank you for having me. And I look forward to having another session on this or something else. Thank you so much.
Sounds great.